Hello and welcome to Akka. Whether it's your first time or you are already an experienced investor, allow me to tell you everything you need to know in order to start enjoying our investment opportunities. Investing in startups is a truly exciting adventure. Invest at a very early stage with a very high growth potential. You will meet the founders, you will analyze the documentation that we provide you with, you will hear from great industry experts, great CEOs that invest with us in the startups. But above all, you will enjoy the swing of emotions that startup investment is like. A lot to learn along the way. We invest specifically in seed stages. This is a very early stage of the startup whereby most of them have already gone through what we call the valley of death. They are already thriving. They're already selling the products and services in the market, and we believe it's the best moment to get the best multiplier. Our investment thesis is quite simple. We invest in fast-growing companies with very little burn rate. What does this mean? It means we invest in startups who have used very, very little capital from their creation until the moment they go through Akka. This is very different than normal traditional venture capital firms that invest in 10 startups knowing that 9 of them are going to die and 1 of them is going to give them the whole return of investment. Our intention is to win in every single opportunity we present to the club. But beware, investing in venture capital, investing in startup is a long-term investing. We're looking for an investment of 4, 5, 6 years. This is not the typical investment you can find in the stock market or are public. Rather, these are private, exclusive rounds that very little people have access to. Hence, we have a preferential treatment and an exclusivity the moment that we negotiate a deal. It is also important to note that the moment you get your returns, you don't do it the same way you would do it on the stock market, where you place a sell order and then you would get your liquidity. In the startup ecosystem, in venture capital, we need to grow through what we call a liquidity event. This liquidity event can come from selling our shares or participation in the startup to another company, or in a new investment round, selling our participation to another venture capital or private equity firm. That's why we always say that investing in startup, it's a risky investment. There is a chance that you lose your deposit in one of the startup if it fails. That's why from Akka, we always incentivize you to diversify and not put all your eggs in one basket, but invest in different opportunities that we present to you along the year. Luckily for you, we take care of all that part. We receive hundreds and hundreds of investment opportunities per month. We do then what it's called a very deep due diligence on every single opportunity of 7, 8 to 9 weeks. And even then, after having gone through the whole due diligence, we may not present a specific opportunity because we don't think it's sexy enough for our investors. So all you have to do is enjoy the moment and enjoy the opportunity. In every single startup that we present, you're going to have different events like live with the founders that you will be able to ask them the question yourself and they will be able to explain the startup much better. You will have video analysis from our side where we explain what we liked and what we didn't from the opportunity. And you will have a lot of documentation and a lot of learning courses in order for you to have the best decision making of whether you should invest in that specific opportunity or not. Thank you for your attention. You will have videos like this one in our academy where you will be able to enjoy e-learning videos, success stories, founder stories, and so much more. Hope to see you next time and happy investing.